All right, good morning, everybody. It's time to get your global macro on. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities across global markets. My name is Wayne McDonald. I am the founder, but I'm also an actual economist. Yeah, and I created this whole site so that we can automate all our global macroeconomic research. QuantBox logs in to databases all around the world, private and public, pulls all the data, organizes it so that you can make logical, intelligent investment decisions based on actual facts like the flow of capital into and out of assets. Yeah, very cool. So, anyways, it does a lot of work. It does a lot of work, a ton of work. Why don't you swing by quantbox.co if you're watching this on YouTube and actually become a subscriber? Your first week is only $8. And you can take a look for that $8. You can see like how QuantBox pulls all this data and says, hey, look at the difference between Europe and the United States for GDP growth, inflation, employment, interest rates, institutional positioning, retail positioning, technical analysis, seasonality, so on and so forth, scoring it and creating biases based on logic and intelligence, not just because you always trade euro dollar. So, anyways, organize your thoughts, get on board. Welcome to QuantBox. That being said, oh, it doesn't fit. There we go. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Wow. So Hezbollah attacked. Did you notice that? Something we talked about yesterday and on as far back as Sunday. Well, the Israeli troops go south, which leaves the north wide open, and now Hezbollah is involved. But notice, not until the United States moved their aircraft carrier. It's always tit for tat. So the United States will probably then find some evidence that Iran is involved, freeze their assets, oil prices go up. Saudi Arabia helps the United States by increasing production. That makes Iran upset. So Iran sends in drones to Saudi Arabia. So, anyways, could get interesting pretty fast. All right. So, anywho, yields on the 10-year. Remember yesterday? It was 4.8. And I'm like, hey, it's going to come down to 4.6. Well, it closed at 4.65 on its way down to 4.5. Money is flowing into the bond market. Oh, faux show. Oil is refusing to go up, stuck at this 85 level. Gold just hanging in there. Hey, stock market's going up. Still, week 41 has been a great week. Who would have thought? Oh, yeah, that's right. We did. And then euro dollar flat. Bitcoin, up and down around, but nothing really. So the market is still quite okay. Biggest pig in the world is Great British Pound. It's nasty. And USD yen still the very much bullish, but I think all these things are changing a bit based on seasonality. So it hasn't changed directly, but it just might soon. Let's take a look at the longer term. How we do in medium? Well, a week ago it was risk off. Now we're just ever so slightly risk on a weekly basis, which means you want to be long Aussie, you want to be bullish euro, you want to be bullish CAD, you want to be bullish Kiwi, you want to be bullish gold, you want to be bullish the dollar. Cool. You want to be bearish, Swissy? You want to be bearish, yen? You want to be bearish, dollar? Still risk off on the longer term, but definitely a bit of a rotation here on week 41. Okay, VIX is down. That's good. Dollar's down. That's good. Okay, yields are down. That's good. Yen is up. Oh, that's bad. Okay, gold is up. Okay, S&P 500 up. That's good. So yeah, it's turning. It's turning. Take a look at the scatter plot. See where everything is right now. A lot of neutrality. Look at the, if you get rid of Bitcoin. In fact, we could just do that. The biggest loser is down 0.5%. The biggest winner is up 0.5%. So, anyways, markets flat and waiting. Excuse me, flat and waiting. I would say it's skewed to bearishness. Seems to be right. Seems to be a lot of stuff over here. Seems to be a lot of stuff over here. None of which really fits into the plan very well. Okay. So, anyways, seems like nothing's happening at the moment. That's fine. All right. Institutional investors are still long the Japanese stock market. They're still long oil. They're still long dollar, but this might all be changing, right? We want to watch some of this change. And of course, the changes we get from this page. So, like with euro dollar, okay, euro's been quite weak, dollar's been quite strong. I wonder if this will change in the near future. Okay. Still built in bullishness since May. Okay. Bulls have been hanging in there. Okay. They've just been hanging in there. It's doing okay. We've already covered this, but you want to look at like where the money is going. Most of the money has gone into the NASDAQ. Okay. Right now, that market is 50-50. Isn't that interesting? Okay. Now, what I want to point out here is there's significantly less people shorting the S&P 500. Remember, it's speculative. They're not hedging. Those are short traders. 42,500 contracts have been removed from the short side. Well, some money's come out long as well, so people are going neutral. But it seems to me that that makes sense if this is slowly going to rotate back into long. Okay. 50-50. It's interesting. 50-50. Hmm. Yeah, we got to keep our eyes on all of this stuff. I think all of this is rotating this week. Also, with the second war going on, uh, so in the next couple of weeks, I think we'll see the change of capital. Like for example, we know in week 41, the market for treasuries has skyrocketed. It was horribly, 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 horribly bearish. And now suddenly, boom, very bullish again. The 10-year T-note probably has hit a bottom. And in a week or two, once we get to the where the data prints, so you can see like, oops, trying to get this here. Okay, clearly a bearish market. Okay, 10 days ago. And I think what we're going to see on Friday afternoon when the new data comes out, will that capture it? I think it will. Suddenly you're going to see a big spike long, and that's that. Like, boom, markets changed. The world has changed. And so a lot of other assets could change too, huh? So we got to keep our eye on seasonality. These are dollar pairs. Okay. So back in September, based on seasonality, I said keep an eye on euro dollar. It typically goes up. The September to October period. This same period, pound dollar tends to want to go up. Same period, Aussie dollar tends to go up. Same period, Kiwi dollar tends to go up. Same period, USD CAD tends to fall. And around September, October, okay, USD yen tends to fall. Very cool. In the gray line, you can see the update as we rolled into October. Everything did go up that should go up, and everything that should go down did go down. We found our turn right there at the beginning of October. It's nice to know these things, huh? So maybe we could look at a particular asset. Well, I have to put my coffee down. Oh, so much work. All right. So here's what it looks like. And you can see the bottomed out in September and should start climbing in the October period, climbing in November, and even climbing into December. Look at where all these peaks and valleys. Isn't that nice? The gray line is what actually happened. It's kind of cool. Yeah, kind of cool. Okay, typically we see this asset bottom out week 39 and week 40, which was last week and the week before. Okay, cool. Okay, bottom out and then up for a while. Modest up. Okay, at least over the last 5 years, you see there's some modest up. On the longer term, it gets a little bit tricky. Little bit tricky. And you can see that here, 5 years versus. So this analysis is only 10 years. This analysis here is 20 years. It says all time. It's 20 years. And so, anyways, you can see the last 5 years have been quite bullish for this asset, unusually bullish compared to the past. In the past, you can see it flattens out and does nothing. So we'll have to pay attention to that. There's our dramatic drop in oil prices. Okay, you can see it just really the shift is a little off, but we had unusual players in the market, and that always changes reality. The biggest player, obviously, is the United States government dumping oil onto the market that it didn't just drill out of the ground. The government had been saving it. So it just kind of appeared out of nowhere. And so, it messes with things, I think. And so you can see the peak happened a little bit late. Major drops, though. These drops are cray cray. Look at that big week here, huh? Week 18. Wondering if the developers could actually put a date on this. Wouldn't that be nice if it just said like April something? January, February, March, April, May. So somewhere in here. Yeah. Right before the big move. Yeah. Interesting, anyways. So where are we here? Typically oil falls. Hmm. Okay. There's a upward move this week, 2.5% up, followed by down, 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 down. Okay. Oh, okay. So we got to be careful, actually, huh? Based on that. Cool. So, anyways, we have this data for everything. Very cool. So, we got to be careful because now oil is an issue with tensions in the Middle East, but normally oil falls this time of year. So, I've had 3 break even trades on this, I think, maybe 4. Just waiting for it to head up based on these tensions eventually threatening. I still think it's likely. So 24 hours ago, we were talking about, or I was talking about, how all the Israeli troops are moving south to handle Hamas. And I proposed that maybe that was just the diversion tactic. And this was all about Hezbollah, anyways. And Hezbollah is up north. And so now all the Israeli troops are south. And now there was an attack by Hezbollah in the north. And we'll see if that spreads. And then, of course, that could tit for tat, tit for tat. It just leads to more things. Eventually, it could bring in tension when it comes to, let's say, Saudi Arabia production. I think at first, Saudi Arabia will declare it will increase production. And then I think something will happen to offset that. So volatile, it's going to be volatile. So the technical analysis on oil. Where's my drawing tool? Oh, wait, I remembered. I have to kill it before I can start it. Yeah, see, 3 versions of it are running right now, and I haven't even started it. There we go. All right, Epic. There it is. All right, cool. So, what might happen is it looks like we need a news event as a catalyst if it's going to go up. Okay. Seems like what's happening, and especially when you look at the seasonality of things, is that we had the gap up out of fear, nothing really happens, complacency kicks in, and then a catalyst takes off. Okay. The first gap was worry, and now we've had this pause. Um, but Iran really isn't in the picture. Saudi Arabia really isn't in the picture. Iraq really isn't in the picture. So nothing to worry about. But I can tell you there's a lot of emotion involved in the Middle East, and it could flare. But also some of these tensions are 2,000 years old. It could just spread. Yeah, it could just spread. Iran and Iraq are not friends. Iran and Saudi Arabia are not friends. Never have been. These things can spread. Okay. You hear Erdogan from Turkey? Nutcase. Anyways, he's telling everybody in the Muslim world that America's moved in their aircraft carrier so they can just start killing everybody randomly. I'm like, whoa, whoa, whoa. That they're going to start carpet bombing everybody, and you're like, whoa, I don't think so. But that kind of stuff, that kind of rhetoric doesn't help. But of course, that's the guy that drove his country into the ground. So, but I don't know. This can get nasty. So, as you already know, keep your eyes on gold, keep your eyes on oil. Gold really isn't that great of an asset class to be investing in this time of year, and compared to high yield stuff that you can just purchase. But if you recall, Sunday night, I'm sitting at a Starbucks waiting for the market open, and then boom, with the idea that regardless of normality, what's happening in the world is abnormality. And that if there is fear because of war, gold, golden guns. Okay. And so gold, yeah, seems to have some bid, huh? Gapped up and is stepping up. And now is through the weekly target. And if you recall, we had an R1 target up here, 1918. Remember that? And then I got all blurry because I started thinking of all the World War One history, which has nothing to do with this. But anyways, so yeah, there's a bid on gold. This one's unusual because you'd think with all this nastiness going on that the stock market would go down. That's what I thought, and I bought this anyways because if you remember my Sunday babble, I'm like, I don't know what's going to happen. I don't know. I don't know what's going to happen, and I have massive concerns about what's going on in the Middle East. So I'm going to buy gold and I'm going to buy oil, but I'm going to buy the stock market anyways because that was my plan 6 months ago. So I can't just abandon that. So I got to try it. I don't think it's going to go up, but that was my plan. I think tension in the Middle East and war and all that will bring the stock market down, bring dollar strength. But that wasn't my long term plan. So I'm going to do it because I don't know. I don't know. And it doesn't make sense to me, except this is usually what happens. And I'm long and it's working despite all the tensions. And there you go. So on Sunday, I was clear. I don't know, but I got to do it. I got to try. It was my logical long term plan to be a buyer in week 41. So I'm going to buy it on a double bottom, 382 Fibonacci retracement of the higher high. Projection here, if I was just going to do standard technical analysis, Um, 382 predicts a 1618, and that gets us to 44. Smells like we're on our way. Okay, cool. I'm glad I did what I wanted to do. Yeah, cool. So now let her run. I mean, we're still not on a free and clear plan. We have a lot of risk on this trade. I mean, this is a problem technically. But very often what you see is we'll respect, we'll call it the 55. It comes down from the 55 to the 8. All right. That's the first step. Then the second step, it goes from the 8 to a higher high and then comes down to the 5. And the 5 by then will be kind of like this. Okay. And then in step 3, it'll come down to the 21. Okay. So up to the 55, down to the 8. Higher high, down to the 5. Higher high, down to the 21. And then what happens up here? Well, praying never hurts. So, anyways. Yeah. Cool. I guess we got to look at some more dollar pairs. We'll see if the dollar weakness continues. Here's the Kiwi dollar plan. Okay. I remember saying that it's not a good setup, but the setup is different in time than what we had before. So we're up there and I have it coming down to this area and it looks like we did. See? Didn't make a higher high though. So we're hanging out here. This is a real problem, isn't it? But if you're going to stick to the mission, what's going to happen is this 21 is going to come along and act as support, and then you'll get your pop, your drop. Okay, I like that. Okay, that's the idea. I'm reading into it though, like I could disagree with myself and say that's not how you trade a range. Okay, but the range might actually be here. Just this one didn't work. Oh well, that happens. Okay. So, anyways, that's that. That would be Kiwi dollar strength. No, not necessarily. US dollar weakness. Yeah, that's the setup. Something similar should be occurring here. Okay, when I set this up, this was yesterday, right? In the, I think the open of the New York session. So here's a 1-day candle, and I highlighted that as a potential long. And it basically worked. We didn't really get much of a higher high, but it basically worked, right? This is the idea. So we're stuck, but slowly should be climbing, is the thought. This is on a 5-minute chart because I did a scalp yesterday in the New York session. Made 20 pips. Yeah, it was amazing. All right, so let's go hourly. Mm, 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 mm. Yeah, what was the trade? I don't even remember. I suppose it was this because I've measured the bottom. You can see what I've done. That would have been the previous day's low as part of the daily candle, the previous highest high of the daily candle. Okay. Then I've done the Fibonacci study, right? You can see it here. And then we were already down, and I showed that this was a 618 Fibonacci retracement. See, 382, 50%, 618. So we're already at the bottom of the sweet spot. So it's just a day trade from the day trading thing. It's an right. And so I longed it. I made 20 pips. Hey, but this is what people do. But anyways, so it went from 105.75. It didn't make much of a higher high. I guess I shouldn't be laughing. It didn't go up much more than that. So, anyways, it went up 50 pips. But nonetheless, so you could do the same thing, right? But you can see even on an hourly, we're below a predictive moving average, and we're hanging around the lagging. This one should be bluish, really. So, anyways, we're losing momentum on this one, is what it looks like to me. Okay, probably waiting for that 4 hour 21. And, it means it looks like it needs another day. And this 21 is going to move up and to the right, and it's going to tickle the bottom of this range. So, another way of looking at it is we're getting pretty close. Okay, getting pretty close. So if it tickles 106, I guess we're only at 106.7. Like, I mean, that might have been an opportunity, right? That last drop to 106 might have been a great opportunity. And the markets are now getting ready to open. So, interesting. So this zone here is the market open. I mark the market open at 7 a.m. because I like to front run. So I want to ride the wave of new money coming in as New Yorkers roll out of bed. That's why I wake up at 4 something in the morning. I want to be up first. I want my money in first. And then as new money comes in, they carry. Okay. So like in particular, gold is excellent for trading this time of day. So if you go into like a 15-minute chart, this is a great time of day, or yeah, great time of day to trade gold. And in the next like hour, typically if you get your trade on, um, it will run until about 10:13. about about 10:13. And then what it'll show is between now and then, probably 70% of the daily range. So let me try to throw an example out there. I believe it's in the training course somewhere at Investor Bootcamp. But like, what if in the next hour? I'm not saying it will happen. I'm just saying if. What if? What if in the next hour it turned a little bit bearish because we've already hit today's target? See, today is done, by the way. It's already done. This is why we plan things a day and ahead. So the next plan for gold is this. So what if that actually happened in the next hour? Okay. So I want to eyeball like these prices here. So let's just do it this way. I want to take a look at this and then this. So if in the next hour, excuse me, you get a little bit of a pullback, I might want to buy it. And now I'm done for the day. And by this time tomorrow, I should have already profited. That's, I believe, how you should trade. What most people do is they log in and they're up here. So they want to buy. I'm like, well, where were you here? like, like, right? So they want to buy here. What? No, you buy here. Excuse me. Okay, you buy these pullbacks to the moving average, for example, or you buy at the pivots. You buy pullback. So most people will start New York. Excuse me. Excuse me. They'll log into New York. They'll see it's high and they want to buy it. Well, Ace Ventura, pet detective, would say, "Who, sir?" Right? Yeah, that's not how you do it. So today is actually done. Today's trade plan, Wednesday's trade plan, which we had yesterday, was that was the buy zone. And if it worked, this is where profit taking would occur. So it's done. So now that it's Wednesday, we should be planning Thursday's trade. Thursday has a buy somewhere between there and here, as I've already highlighted. So I'll let it run, let it do its thing, whatever. Okay. Now if we go, HOTTOGO. Nice. So I've gone too long again. I'm sorry. Peace on earth. May the pips be with you. May our profits be above average. Have a wonderful trading day. I will see you very, very soon. I am sure of it. So I'll say it again. Peace on earth. May the pips be with you. May our profits be above average. And I mean it. Peace on earth. Cheers.